Startup-focused lender SVB Financial Group, that is the Silicon Valley Bank Group, became the largest bank to fail since the 2008 financial crisis on Friday in a sudden collapse that roiled global markets, leaving billions of dollars belonging to companies and investors stranded. The Silicon Valley Bank was USA's 16th largest bank at the end of last year with about $209 billion in assets. The bank failed after depositors, mostly technology workers and venture capital-backed companies, hurried to withdraw their money this week as anxiety over the bank's situation spread. California banking regulators closed the bank on Friday and appointed the Federal Deposit Insurance Corporation as receiver for later disposition of its assets. This move underscores the impact that the US's rapid interest rate increase is having on small lenders. Reasons behind the bank's sudden collapse were a jumble, but the Fed's aggressive interest rate hikes in the last year, which had crimped financial conditions in the startup space in which it was a notable player, seemed front and center. SVB is the second regional lender to fold this week after Silvergate Capital Corp announced it was voluntarily liquidating its bank, spurring a broader sell-off in bank stocks. The firm suffered amid the downturn for the technology and crypto startup world over the past several months. Silicon Valley Bank's failure is the largest since Washington Mutual went bust in 2008, a hallmark event that triggered a financial crisis that hobbled the economy for years. The 2008 crash prompted tougher rules in the US and beyond. Since then, regulators have imposed more stringent capital requirements for US banks aimed at ensuring individual bank collapses won't harm the wider financial system and economy. SVB's abrupt demise, the biggest in more than a decade, has left legends of Silicon Valley entrepreneurs in the lurch and livid. In Washington, politicians are drawing up sides, with Biden administration officials expressing full confidence in regulators, even as some watchdogs race to review blueprints for handling past crises. US Treasury Secretary Janet Yellen called several financial sector regulators together on Friday to discuss the situation, reminding them that she had full confidence in their ability to take appropriate action and that the banking sector remained resilient. The FDIC is racing to find another bank over the weekend that is willing to merge with Silicon Valley Bank, according to people familiar with the matter who requested anonymity because the details are confidential. While the FDIC hopes to put together such a merger by Monday to safeguard unsecured deposits, no deal is certain, the sources added.